quick segue to our Silicon Valley VCs, Robin Lee from GGB Capital and Kyle Liu from DCM Ventures. If you don't know DCM Ventures and GGB Capital, you have really got to know them because these are the leading venture capital firms that are doing Silicon Valley, China, cross-border deals. And they've been at it for a long time. So I really, really welcome their expertise. And you could warm up a few questions in the audience if you'd like, particularly since it's rare to get the two top VC firms here from Silicon Valley represented on the stage at the same time. So Kyle and Robin, why don't you just give a little introduction of what you're doing and how you spend your time and what kinds of technologies you're interested in today and how much time you spend in China and versus Silicon Valley. Why don't you, each of you, just give a few introductory remarks so we have some context.
Sure. Yeah. So just a quick 30-second on DCM. We're a 20-year-old Silicon Valley-based cross-border fund. Our three core markets are U.S., China, and Japan. We have about $4 billion under management, of which roughly half of that goes into the U.S. and a majority of the other half goes into China, and then a minority in Japan. We do everything from fintech, consumer internet, enterprise software. I've been spending generally early stage, so seed, Series A, Series B, although we do some growth as well.
Okay, that's fine. Sure. Thank you. Robin?
Hi, I'm Robin Lee. I work with GGB Capital, so somewhat similar in the sense that we're an 18-year-old VC firm that invests across both US and China. And so we also manage about $4 billion. We're investing out of our sixth fund. It's a $1.2 billion fund. The main areas that we invest in are consumer internet, which includes e-commerce, digital media, social, and travel. We also invest out of enterprise and SaaS, which is infrastructure as well. And then lastly, we do IoT and frontier tech. And so I would actually say that's a bit more out of China. Enterprise is a bit more out of US. And then our consumer internet is really kind of US-China cross-border. And so we invest in all stages. We have an early stage fund. It's a $280 million fund that does seed and Series A. We write checks like $100K to a couple $1 million. And then our main fund, we lead Series B and beyond.
Okay, very good. So since we're talking today about the Greater Bay Area's meeting, what are your impressions about the differences, similarities between the two Bay Areas? What do you think are the key differences and what are the advantages of each?
Sure. I mean, so I spend most of my time in the Bay Area. I go to China probably once a quarter or so, and most of my activities in China tend to be in Shanghai, Beijing, and to a lesser extent places like Hangzhou. I used to live in Hong Kong. I think that there's starting to become more and more innovation here, particularly in the areas of fintech and more recently blockchain. It's hard to compare, at least at this moment, any other kind of ecosystem to the Bay Area, just given the tremendous amount of innovation and talent that's there. But we've seen the very, very rapid rise of Beijing as a very second close competitor. And we're starting to see other ecosystems start to pop up. And so with this Greater Bay Area, I think it presents an opportunity to potentially develop another one. Do we think it's going to happen in the next few years? Probably not, but we look at things on a VC basis, we look at things in terms of what's going to happen over the next decade, and clearly a lot can change in that time.
Yeah. Good, thanks. Robin?
Yeah, I spend maybe 2 to 3 times max a year in China. Most of my time is really covering the U.S., but also cross-border deals. So particularly companies who want to go from U.S. to China or have supply chain in China and vice versa. So China going the other way. And so we do have offices in Beijing, Shanghai. So our colleagues would tend to cover China. So in terms of like comparison, I think one key thing that we've seen that really differs between U.S. and China, including like Hong Kong Cyberport, is that the amount of government support, especially in innovation parks and innovation centers. Like in the U.S., we just don't see as much of that, and I think that it speaks a lot to what. China is trying to do and become a leader in technology in the next 10 years, by 2025. And so, and 2030. And so I think that there is definitely a lot more innovation coming out of that. And even in general, like I pulled up this stat about a week ago. And if you look at the STEM graduates coming out of the US, we had about 580,000 last year. And in China, there's 4.3 million. And so in general, there's just a lot of talent that is really dedicated and going to a lot of this innovation. And so we do double down a lot in China. And we haven't made any investments in Hong Kong yet within our portfolio, but not to say that we won't.
Okay. So one of the big tech races today is in artificial intelligence, and we have two leaders in that race, China and the U.S. And of course, artificial intelligence is one of the areas that's going to change so many things in the future. And so what do you think, who do you think has the edge and why in AI?
Yeah, sure. I spend a lot of my time on the enterprise side, and so with that, a lot of time in applied AI. And at this moment, the U.S. is still ahead. So we're seeing that from both if you look at the autonomous car space, the U.S. is probably a couple years ahead of where China is. If you look at kind of core machine learning and core innovations coming from Silicon Valley versus Beijing and Shanghai, probably a couple years ahead, but China is catching up very quickly. I think where China does have an advantage is the corporate ecosystems, particularly around Tencent and WeChat, is so strong. It's actually much stronger than any of the ecosystems that you see in Silicon Valley. And I think that is an advantage because a huge part of driving innovation within AI has to do with having the data. And so that's where innovation cycles, we're seeing that happen much faster in China. So I think to answer your question today, the US is ahead, but it's, China's catching up very quickly.
Catching up very quickly. And I think that's the case in many areas too, like e-commerce. You're seeing some leading trends coming out of China that we just don't have in the U.S. yet, like the Alibaba grocery stores, the automated grocery stores where everything is cashless and no cashiers and speedy delivery. Amazon has a long way to catch up to Alibaba. So what do you think about this? Is this something that's going to China is really getting copied in the future versus the opposite was 10 years ago where China was copying everything. Now things from China are being copied. Is that what you're seeing?
Yeah, definitely. So, GGB invested in Alibaba in 2003. So we were very early investors and have kind of seen the rise of this platform, right, globally. And, I guess maybe, 2013, a lot of my work in venture was taking case studies from the US and like studying the unicorns. At that time, WeChat did not even have payments in there yet. And Uber was just hit about $1 billion in valuation. And we were looking at all these different models like, hey, and there was still black car. And so we were like, can that work in China? So all of maybe 10 decks that I did, which studying all different sectors in the US and can it work in China? What would it need to localize? fast forward last year, we actually hosted 2 CEO trips where we brought a whole group of our CEOs from the US to come and learn from China. And so we're actually seeing this reversal. A lot of that came from us investing in Didi in China. We invested in Grab. We invested in Hello Bike, which led to our Lime Bike investment in New York, in the Bay Area. And so we're actually seeing a lot of innovation coming from China. And if you think about it, there's 3 times the number of smartphone users from China versus US, right? Mobile payments is 10 times bigger in China than it is in the US. And so we actually take a lot of this innovation and what we see and then apply to like, can this work in US? And so we invested in Bingo Box, City Box, City Shop, which is the automated stores that you were talking about. So new retail in China and like, could that be possible in the US? Yes and no. We haven't seen anything yet, but we continue to look. Yeah.
Yeah, we're definitely seeing a bit of a leapfrog effect, particularly in consumer internet, where there are more, especially mobile consumer internet innovations coming out of China than we are in the U.S. And when I first started at DCM, I did a lot of the same thing, where it's like, how can we figure out what the best ideas are in the U.S. and find those equivalents in China. We've done very well at that. And now, one of the big reasons I go to China is to learn about the innovations happening there, to see if there are things that are relevant for the U.S. market. Now, the challenge actually with doing that is that the China market is so much bigger than the U.S. market that sometimes, we'll get pushback from our partners to understand, like, well, is this big enough? Because we kind of will have like a China bias, right? And I like to use the example of like, well, if Didi had started and a couple years before Uber, like would Uber have not been a good investment? Because if you look at all of the kind of underlying supporting reasons why Didi was such a big company, you would argue that it would be substantially bigger than Uber, and like, is that a big enough opportunity, right? And so, we also invested in Lime Bike after we saw the trends in China, and we definitively knew when we invested in Lime Bike that it was not going to be as big of a company as Mobike or Ofo or the market in China, but that was okay.
And the founders were actually from China, right? And so like they were from Fosun. And that was a major reason why we both like invested in them, was because they had that China angle and like understood the market, but be able to, since they lived in the U.S. for a long time, be able to localize it, make it relevant for U.S. And I wanted to also add, one of the investments that GGB made on the e-commerce side was Wish. I don't know if you guys know much about this company, but Wish is a e-commerce shopping app. A major reason why we invested in the company was because we understood Taobao in China and using cheap goods, and then being able to sell to rest of the world. So when we invested in Wish was about, 2012, 2013, where we led the Series B, where like no investors in the Bay Area would touch this deal. They went to up and down Sand Hill, and like no one wanted to invest in them. And luckily Hans saw, and he lived in China for 8 years and saw kind of the rise of Taobao and Tmall, and was like, hey, you're taking, what they were doing at that time was taking about 200,000 products, SKUs from China merchants, and same merchants that would be on Taobao, and like selling them to the US market. Right, so you would see like $2 watches, free shipping to the U.S. Right, like a dress for $5, free shipping to the U.S. And so we ended up working with Wish quite a bit and build out from 200,000 SKUs to about 40 million SKUs today. The company now is in over 80 countries around the world. And did about a couple $1 billion GMV last year, 300 million users on the platform. And so we see this China too.
Yeah, that's a great example of a China to the world story, a startup from China that went outside China before it went in China. Yeah. So it's amazing. Now, I think I'd like to ask you about you talked a little bit about taking portfolio companies to China from the U.S. I mean, to learn what they can from China. What do you think are some of the lessons that can be learned from China entrepreneurs and the whole China venture capital scene? I mean, I hear things like, oh, you know, the China VC scene makes Silicon Valley look really sleepy, and you have the 996, you know, working all the time. And so what do you think are the key attributes, what are the key things that VCs founders can learn from Beijing, Shanghai founders?
I think definitely this 996 is there, right? Like a lot of our U.S. Companies don't have that culture. I want a little bit more work-life balance, but also they don't necessarily face the cutthroat competition that everyone here in Hong Kong and China face, right? There's just there's a lot more gray area in terms of like what the competition could do to you, and so like all of our founders are always, always looking ahead and thinking more strategically, broader. But like one thing that like our founders learn a lot is actually the use of like social commerce and the UI UX of a lot of the apps in China. And so what we do a lot is actually voiceovers of like a lot of the China apps in and out of our portfolio, like Xiaohongshu, and like can Red be, can a lot of the things that are on Red be like translated to US companies? And so that's one thing that we've seen a lot of, because you can't always just export everything like business models either.
Yeah, I think so. I agree with that. The first few years of a company, particularly in China, is really kind of live or die because of the heavy amount of competition that we see. If you take the bike share analogy, there were 30, 40 different bike share companies that were started just in China. When we looked at in 2011, there were several dozen group buying or daily deals sites that were started in China and ultimately led to a lot of consolidation. And if you were the number one or number two player that were able to raise the most money and able to consolidate, then you took a disproportionate amount of that capital. And we almost sort of like, one of the reasons we bring companies to China to see that, US companies to China to see that work ethic, is to really have them in some ways kind of try to move faster, to hire people that are really focused on really executing in a lot of the markets. And I think that that's something that I think we'll see more of, right?
Well, where do you think China's Silicon Valley is going? If you look at a number of indicators such as Nazar showed us, as well as the patent applications and the R&D spending and the number of engineers and the venture capital, all these things are catching up China, catching up to the U.S. Even the number of unicorns, the biggest deals coming out of China. Where is this trend going? Is Silicon Valley going to be overtaken?
Well, there's already 50 more unicorns in China than there is in the U.S., right? And I think as time goes on, we will see that happen, especially as the country develops.
Yeah, Kyle?
I think that on a number of metrics, if you look at like third quarter of 2017, I think there was Chinese venture capital investments surpassed the U.S. for that quarter, and I think that for a number of metrics, China has already surpassed the U.S. But I think the big question for China, including Hong Kong, is whether you're able to attract talent globally. I think that's going to be really important for developing ecosystems that are competitive in the new eras that we are spending a lot of time in, like, for example, artificial intelligence. Right, and where oftentimes people don't realize that like the Bay Area, while it's in the U.S., is a hotbed for attracting some of the most talented people around the world, whether they are from Iran or Israel or Russia or whatever. Like they are encouraging PhDs and very, very talented, hungry entrepreneurs to move there. And I think that with the current administration in the U.S. is not super welcoming of foreign talent at the moment, And so that presents an opportunity for other ecosystems. Like there is actually quite a large opening now. And so where I see it going is that if other ecosystems can really take advantage of that, then they can start to really chip away at that lead around like the core innovation talent.
Right, exactly. Well, I am getting the signal that our time's up. I was going to ask the audience if they had any burning question, but I don't see anyone with their hand up. So I think we'll move on. And Kyle and Robin will be staying around. We are going to be having a break as well. So let's give Kyle and Robin a round of applause. Thank you very much.